test, any exams, right? So I need to also add that accounting is a practice subject. You knowing your formats is not enough. So going through past papers, going through different activities, even if you're going through the activities again, you do it, right? Because in doing so, you are then also gaining the necessary confidence in order to cope and do well in a test, right? So without further ado, let's check out the slides. Right, so this booklet would have been copied by your teachers, or you would have made your own copies if you are not watching live. And it's simply just a message from the people in charge and telling us when we are going to have these sessions. So today's session, we are dealing with the basics of financial statements, and we know that with financial statements, the GARP principles come into play, right? There are 10 adjustments, and on your book, the 10 adjustments would have been on one page, but for the sake of clarity, I've made it into over 2 slides. So the very first one, which we dealt with in grade 10, bad debts. So when we are dealing with those adjustments, remember, bad debts will get debited and debtors control gets credited, right? We'll notice that bad debts is a nominal sheet account and debtors control is a balance sheet account, right? The next adjustment is trading stock deficit. Now, we all know what trading stock deficit is. That is the difference between the book value, the information found in our books and our balances, minus the physical value, which will obviously be given in additional information. Now, when we're dealing with trading stock deficit, we are going to debit trading stock deficit, right? And we're going to credit trading stock, because as we know, a deficit brings down anything that it impacts. Then we have consumable stores on hand. Once again, another grade 10 adjustment. Consumable stores on hand will be debited and stationery or packaging material will be credited or minused. Now, bearing in mind, this information will be found in your additional information once you are given that. The next adjustment, which we are very and should be very familiar with, is accrued income. Now, the word accrued means outstanding. So what it means there is it is outstanding income. And the GAR principle that comes into play over there is the matching principle. You need to remember the reason why we are doing these adjustments is because we want to match all our incomes and all our expenses to the current financial year. So in the event of accrued income, we know that it is money that was not received, outstanding income, money that was not received. We would need to add that into our rent income in order to ensure that our profit is correct. Then the next one, my apologies, is income received in advance. So that will obviously, it states in the wording, it is income that we received in advance. Another name for income received in advance is deferred income. So sometimes they will use deferred income. And what that means is that whatever income that we received in advance, we need to minus it from the income account, because that income is then not for the current financial year. That income would be for the next financial year. We then have accrued expense. Now, what did I say? Accrued refers to outstanding expense, and that makes reference to expenses we must still pay. And you would notice we'll have our expense account. Our expense account will increase or debited, and accrued expense will be credited. Now, bearing in mind, accrued expense is a liability. Okay, the next is prepaid expense. That makes reference to expenses we paid in advance, and you would notice the expense accounts gets credited or minus and your prepaid expense will be debited. The next one is depreciation. So your depreciation is that imputed expense, and once we calculate the depreciation at the end of the year, or when we calculate depreciation when an asset is sold, the depreciation account will be debited, meaning increase, and the contra account to that is accumulated depreciation on vehicles or equipment, which we know as a negative asset. And then the very last adjustment is provision for bad debts. And provision for bad debts, the contra account to provision for bad debts is provision for bad debts adjustment. So that adjustment account will be your income account. Your provision for bad debts account is your balance sheet account, and that account will be what we classify as a negative asset. Why are we classifying that as a negative asset? Because it brings down the value of our debtors' control. Okay? So your provision for bad debt adjustment can be seen as both an income or it can be seen as an expense. Now, when is provision for bad debts adjustment seen as an income? It is seen as an income when you have to decrease your provision for bad debts account. So if we are decreasing our provision for bad debts account, we will then have provision for bad debts adjustment as an income. Then, when is provision for bad debts adjustment an expense? That is when we are increasing our provision for bad debts account, right? So we are making our negative asset more. Cool. So let's get going to the next one. So this is tips for when we are preparing our statement of comprehensive income. Now, sometimes your teacher may say income statement, but the correct terminology for your income statement is called a statement of comprehensive income. The abbreviation will be SCI, just so you know. Right, so these are the steps that we would need to take. So the very first step, so now it's not underlined in your booklet, however, I've underlined it on my side. So underline it, take your pencil, take a pen, take a highlighter, and that will help you. So the very first one is write the pre-adjustment amount in pencil in the framework. So you will be given, let's say in this case we are dealing with income statement, you will write down, you will look at your balances and you will write the pre-adjustment amounts in pencil at the relevant section. So example, insurance, if they give you a balance of 1,200, you write insurance and 1,200, right? Then the next one, start with the first adjustment. You need to read the adjustment. Don't read the first two words and then make up what you think they're trying to ask you. You need to read the entire sentence completely. So read the adjustment. The next one, decide on the double entry. So you ask yourself, okay, which two accounts am I dealing with? Which account is going to be debited? Which account will be credited? And as we've done, we've summarized all the adjustments quite nicely for you, so you can make reference to that, but hopefully not too much, eh? Then the third, or rather the fourth one, you write the adjustment next to the sign. So once you've figured out the answer you were looking for, you've done your calculation, you will then write the answer next to the adjustment sign. So as we did, the example that we gave, insurance was 1,200 initially, and then we added 300. Very, very, very important to show all your calculation. And then once all the calculations of the adjustments are done, write the final amount for each item in the last column on the right hand side of the statement. So we all know 1,200 plus 300 is 1,500. We write it in that column where it needs to be. Now remember, we look for, even though you get part marks for calculation, it is very important to do your final calculation. And then, very, very last thing, don't erase your working. It doesn't matter what you're feeling, grade 12s. Please do not erase your workings, right? You show it. Because in that workings, we will award you part marks or method marks for the final answer. And especially, let's say your final answer is incorrect, then we will look for marks. So as teachers, we are always trying to give you the best possible mark that you deserve. And we can only do that if you are showing us all your calculations. Right. So that was quite a nice summary. I would suggest you go through that again, understand it, let it be part of you, let it be part of your spirit, if I can put it that way. But it is quite important that this should not be the last time you're looking at it. Okay, so read it through yourself, understand it. If you need to Google some words, then Google some words, Right, so let's get going like a Boeing. And we are going to look at the activity for today. And this is the activity. Now, I know a lot of you will be like, oh my gosh, what do? I see so many words. Isn't this supposed to be accounting? I only want numbers. Relax. Calm the form, okay? Take it step by step. And I'm going to show you step by step how to go about doing it. So you will be given this page, or in the test or exam, you will see the question. Read from the beginning, and we're going to do the process together. Right? So this is your the question paper that we're going to be looking at, and this is the answer sheet. Now, in the answer sheet, some of the information is filled in, and we then need to fill in other information. Right? Now, remember, the very first step is to write down all the pre-adjustment amounts in pencil. Remember that. So this is what I had done. Obviously, I didn't do it in pencil, but you will see that I placed the pre-adjustment amounts in blue, and that is what we mean by the very first one. Okay, so let us get through the activity. Okay, we ready? Cool, let's do this. So, as I said, you read the information. So you go from the top. Activity 1.1, Statement of Comprehensive Income. The following information relates to City Traders Limited. Now, as we know from our theory, that is a public company. A private company would be Pty Limited. And then very importantly, for the financial year ended on the 30th of June 2022. So the first thing that should come to your mind is, what is the current financial period we're dealing with? So if the end is on the 30th of June 2022, the beginning of the current financial period that we are looking at would then be the 1st of July 2021. Okay, so that's very important, knowing what your financial period is, because then it helps with the accruals and it helps with the prepaid expenses, etc., etc. So we are asked to complete the statement of comprehensive income, and in brackets income statement, for the year ended 30th of June. So remember, in the accounting cycle, we are at the end of the process, and in the income statement, we are now trying to figure out what is the profit of the business. Okay. Now, in the income statement, we will only look at nominal accounts. Okay, only nominal sheet accounts. Please, people, we do not want to see land and buildings in the income statement. Right? Classifications of accounts is very important. So the accounts that makes up nominal accounts is incomes and expenses. Great stuff. Incomes and expenses. I don't even know if you're answering me here. I'm just pretending you are. Right. So now we have the pre-adjustment trial balance over there. Now look at the word pre. What does it mean? Before, right? Before any of these adjustments. that are to follow. These were the list of balances. Let's have a look at what it is. We have sales. Does it look familiar? Yes. Rent income. Does it look familiar? Yes. Directors' fees. Now this is the new expense that we will learn, that we learn in grade 12. And directors' fees is basically the directors' salaries that they are earning. And we see that there's a question mark over there, so we know that we have to do some sort of calculation, eh? Salaries and wages, that makes reference to the salaries and wages of normal workers, if I can put it that way. Employers' contribution, that is that extra expense, the perks that employers give to their workers for working for them, and that's an extra expense for the business, okay? Then there's advertising. Are we familiar with this? Yes. Audit fees. Now, audit fees is another new expense that we learn in grade 12. That audit fees makes reference to the external auditor. So the person that checks the income statements and the statement of financial position, i.e. balance sheet, that is the fees that we pay them. So that is external auditors' fees. Then we have depreciation. Does it look familiar? Yes, it should look familiar. I'll be worried if it doesn't. And then sundry expenses. Does it look familiar? The answer is yes. So out of this list of balances, the only new-ish ones, and quickly to understand ones, is the director's fees and auditor's fees, right? These fees are for the CEOs, the CFOs, the salary of them. And then the auditors, this is external auditors, the external auditors' fees that we will make reference to there. Right, so let's go to the very first adjustment. And it says, the rent income for July 2022. So we have July 2022. When does the financial period end? On the 30th of June. Has already been received. So automatically we know that this amount, whatever it is, must not be part of my rent income. It must not be part of my rent income. Why is that? Because remember the matching principle. The matching principle says that only incomes and expenses for the current financial year from the 1st of July, any month in between, till the 30th of June 2022 must be reflected. Okay? So we know that whatever this is, we're going to have to minus it. Then note that the monthly rent is decreased by 8% effective on the 1st of May 2022. Now, what I often tell my learners is that the moment we see dates, draw your number line. You draw your time period, right? So we're going to start from the 1st of July 2021, and we know that's our time period, to the 30th of June 2022. So from there till there, that is the financial period we want to look at. When did they say the increase, or in this case, when did they say the decrease came into effect? On the 1st of May. So the 1st of May, we know that decrease of 8% came into effect. We also know that there was a month that we got paid, the 1st of July, that should not be in our current financial period. Okay? That month should not be in the current financial period. Now, how many months from the 1st of July to the 1st of May? Use your fingers. You were taught that in junior school. There's nothing wrong with doing it. Okay, so 1st of July, August, September, October, November, December, January, February, March, April. Now, I am not going to include May. Why am I not going to include May? Because it's on the 1st of May. Okay? So, for 1st of July to the 1st of May, that is going to be 10 months. Before the decrease of 8%. And then it stands to reason from the 1st of May to the 31st of July, right? To the 31st of July, that 8% will impact that rent income. So how many months from the 1st of May to the end of July? That is going to be 3 months. So in total, we received 13 months, right? And it makes sense because a normal financial period is 12 months. So that extra month is 13 months. So how are you going to go about doing it? You're going to say 10. The original value of the rent income before the decrease plus 3 months, right? 3 months after the decrease, and we're going to say X times 92%, okay? X times 92%. That is going to be equal to 153,120. Where did I get this? I got it from my pre-adjustment amount. Remember, we are going to try to adjust that amount accordingly. Right. Then, we all did basic mathematics up until grade 9. Right. What we're going to do? That 10x, and you're going to say 92%, and 92% is essentially 92 divided by 100 gives you what? 0.92 times 3, and that will give you 2.76 plus 2,76x. Remember, you're multiplying everything, so that x will still be there. Is equal to 153,120. We're going to add these two. What does it give you? 12,76x is equal to 153,120. To get x on its own, guys, this is grade 8 maths, eh? We're dividing both sides by 12.76. Both sides, 12,76. Simplify it out, and therefore, x is equal to 12,000 Rand. So what does it mean? This is the rental before the decrease. So before the decrease, that is how much rental we were supposed to get. So let's try to figure out the total. What would the rental be after the decrease? We are then going to say, right, 12,000 Rand times 92%. Remember, a decrease by 8%, eh? We're going to say times 92%, and that gives you 11,040 Rand. 11,040 Rand. So we know that the rental will decrease by this total over here, 11,040 Rand. So what are we going to do? We're going to enter it into our oh, sorry guys, here we go. We're going to enter it into our statement of comprehensive income. Now I've already said rent income, pre-adjustment amount 153,120. I'm going to minus that amount of 11,000. What do we calculate? 11,040. You show it in brackets like that, okay? The reason for that, should you have made a mistake, yeah, we will look for marks. But in this case, because it was such a simple calculation, there would be 2 marks allocated for that. Okay, so while we're at it, we might as well do it. So we say 153,120 minus 11,040, and that gives us 142,080. So now we know if we run out of time, at least we got that. At least we got that. Let's go to the next adjustment. So we've done and we dealt with rent income. We make a little tick and we make a tick at B and we say, okay, right, the next one. The company has 3 directors. 2 of the directors receive an annual fee of 192,000 each. So it means director number 1 will receive 192,000, director number 2 will receive 192,000. Okay? Then the third director receives 10% less than the other directors. All 3 directors received the full amount for the year, so meaning they received it already. And the bookkeeper recorded this amount in the salaries and wages account in error. Okay, so what are we going to do there? So firstly, we need to figure out just how much money that third director has received. Okay, so let's do our calculation. So what is the first thing we're going to do? Guys, I just need to see something quickly. Okay, yeah. What's the first calculation that we're going to do? We are going to do the following. We have director number 1. That's 192,000. Then we have director number 2 also earned 192,000. Then director number 3. Who is director number 3? And what does director number 3 earn? Who is director number 3 and what does director number 3 earn? Okay? So, we are going to do the following. Because this is per annum, meaning per year, we need to first figure out how much the monthly value is. Okay, this is obviously one way, but if you find a different way, by all means do so. So we're going to say 192 divided by 12. And what does that give us? So here's our calculator, 192,000. Divide that by 12. What does it give you? It gives you 16,000. You got that? Great stuff. We now know that the third director only receives 10% less. So it means that we can say 16,000 times 90%, and that gives us times 90%, and that gives us 14,400 per month. 14,400 per month. So the yearly value would then be what? 14,400 per month times that by 12. And what does that give you? That gives you 172,800. Another way that we can do it, we can say 192,000. We can times that by 90%. And what does that give you? 192,000 times that with 90%. Also 172,800. Same thing. So this is the annual value of our director. The annual value of our director. So remember, they said that the directors, all 3 directors received the full amount, and the bookkeeper recorded this amount in the salaries and wages in error. So remember, our salaries and wages of our workers must be separate to the directors' fees. And the reason for that is transparency. Okay, for the sake of transparency, the shareholders would want to know how much money the directors are earning. Okay. Then it says, the third director, however, decided to resign. And this was approved on the 30th of May, 2022. So it means 1 month before the end of the financial period, right? And then it says, he promised to return the fees that he received for the period and that he would not be serving the company. So that is just some extra information saying that the third director that earns less will give that 1 month's salary back. So what would our director's fees amount look like? By entering it into our income statement. We're going to say 192,000 plus 192,000 plus that full amount that he earned, 172,800. You got that? Minus the amount of 14,400. Okay. So it will be the 2 directors over there plus the 3rd director, and then we're going to minus the 14,400. Why? Because that director resigned. So what are we going to do? We are going to say the following. We've done our calculations. 192,000 plus 192,000 plus 172,800 minus 144,100. You got that? And that is going to leave us with 542,400. Great stuff. Now remember what they said. They said that all the directors received the full amount for the year, and the bookkeeper recorded this amount in the salaries and wages in error. So what did the bookkeeper do? Instead of putting that information next to directors' fees, that bookkeeper put that information in next to the salaries and wages. And therefore, what are we going to do? We are going to say minus these 3 amounts. So we're going to minus the 384,000. Now, you'll be asking me, ma'am, where did we get the 384,000? It is those 2 directors, right? It's 384. And just for the sake of space, I'm just putting it together. And then we're also going to minus the director that earned less fees. Okay? So we're just going to take the full amount and minus from the salaries and wages. And that's the end for the 3rd one. See, tick. We all good in the hood. We happy with that. We happy with that. Ooh, here's a nice salaries question. It said that 1 employee was omitted. Now, what does the word omitted mean? It means left out. Shame. Left out from the salaries journal for June 2022 while she was on maternity leave. Her salary is as follows. So what do we have over here? We have deductions. Now remember, this deduction will come from the gross salary of the worker. Okay? So this deductions will come from the gross salary of the worker. In terms of if we were to deal with this transaction in the balance sheet or the statement of financial position, this deductions will be considered liability. Because essentially, what are we doing? We are taking off this, or we're deducting money from the gross salary in order to pay the workers pay as you earn and medical aid. Right. So we have this deductions. This is taken off the gross salary of the worker. Then we have employer's contribution. Now, it's like a company perk. You know, some businesses give employers or employees, my apologies, a laptop to use or a car to use, or, you know, all various things. So one of what employees' contribution means is extra money that the business has to give out of their own pocket for the employee or the worker. Right? So this is an extra expense. And we will see that when they give us a list of balances, salaries and wages is separate to the employee's contribution. I also need to add, this salaries and wages is the gross salary. Okay? It is the gross salary. And in order to calculate the gross salary, I'm going to tell you now how to do it. So we have employees' contribution. Then we have net salary. Now, net salary is after the deductions, meaning after this over here that has been taken off the gross salary, this is how much money is going to be deposited into the worker's account. 6,700 Rand. So it stands to reason that if your net salary is your gross salary minus deduction to get your gross salary, we are going to say what? 6,700 Rand plus the deductions. Okay, let me do it on a piece of paper here. So in order to calculate the gross salary, we are going to say 6,700 Rand plus the pay as you earn, which is 2,050 Rand plus 970. So that's your net salary plus the deductions gives you the gross salary. This gross salary impacts your income statement or your statement of comprehensive income. Okay, so how are we going to put it in here? We are now going to say, right, our salary amounted to, wait, let me just add up the salaries quickly. Sorry, guys. So we'll say 6,700 plus 2,050 plus 970. Boom, it's 9,720. So that is the gross salary, which is your net salary along with the deductions, right? That gross salary impacts your income statement. So what are we going to do there? We're going to add plus. And what is the amount? 9,720. So once we've done everything, we're going to be, okay, cool. 812,000 minus the 384,000 minus the 1,728,000. Oh, I love this double digits over there. Plus 9,720. And what does that give you? It gives you 2,000. I lie. 264,920. 264,920. So where will the marks be in this one? And I think it's quite important for you to see the mark allocation. In this event, they are giving, I'm going to use a different color pen so you can see. In this event, they are giving 812,000 a mark for that. They are giving a mark for 384,000, or if you had placed 192 to get that, they will still give you the mark. They will give you a part mark for this. Now, why are they giving you a part mark there? It's because it's based off what you did over here. It's based off the calculation you had did prior. So I love that part marks. My kids love it because, you know, sometimes it's the part marks that gets us through accounting, eh? And then you're going to have 2 marks for the 9,720, which is the gross salary. Now you would notice there's no principal mark there. There's no akshay mark is what I like to call it. It's either all or nothing. And then at the end, you'll get a work with mark by just adding up whatever you've calculated there. In total, how much is how much marks is this? So it's 1, 2, 3, 4, 5, 6 marks. Now imagine you didn't show this calculation and you got it wrong. You would be missing out on marks. So what am I saying? Show your calculations, okay? Right, we're not done with that. Remember, there was this employer's contribution. What are we going to do there? We're going to add 1920. Okay? And we're going to say, right, what is this? 22080 plus 1920 is equal to 24,000 Rand. what would the mark allocation be there? Oh, they're being very nice here. It will be this one, your pre-adjustment mark, then obviously the amount that you have over there, and then 24,000 Rand as well. Cool. I didn't show you the mark allocation for the first one, so let me just show you the mark allocation for that. So you're going to get 1 mark for showing this 192, 192, because that's an obvious thing, eh? That's an obvious calculation. Then you're going to get a mark for 172,800. And then you're going to get the work with mark for whatever your calculation was over there. Okay? And then a work with mark over there. Right. Cool. How are you guys feeling? I hope you're feeling okay. But it does require you to read. And there's a lot of information background information that you must know for this. It's not just reading and you're going to know. I mean, we've dealt with salaries journal in grade 10, right? We dealt, and so that's where we're coming from. We're taking from your information that you need to know from grade 8, grade 9, grade 10, grade 11, etc., etc. Okay. The next one. E. Advertising excludes, not included, an amount of 7,500 paid for the period of from the 1st of May to the 30th of September 2022. Now, when I read it first, I was like, oh, it's for a year. No, it is not an annual advertising premium. So you have to take that into account, right? You have to take and look at the dates very, very, very closely. And then the last one they tell us, a fixed rate is applied monthly, meaning that each month it is the same amount, right? So what are we going to do over there? What calculation? I'm just going to turn this over because I want to save trees. I don't want to be killing trees here because I'm just trying to do a new calculation. Right. Once again, they give us a period, and therefore, what must you do with the period? We have to write down what our accounting period is, right? Our accounting period ends over there on the 30th of June 2022. 1st of July is where it starts, 2021. When did we make this advertising payment? We made it when? On the 1st of May. So 1st of May 2022. So it means that only from the 1st of May to the end of June is what we should be taking into account. Now remember, advertising was paid up until when? The 30th of September, right? 2022. So from the 30th of June to the 30th of December is outside of our accounting period, and we know that our matching principle, GAR principle, says we only need to take income and expenses for the current financial year. Anything outside must not be included. So therefore we know that whatever we're going to calculate here, we need to minus. Cool. So how many months from the 1st of May to the 30th of September? We're going to count using our fingers. Hey! May, June, July, August, September. So 5. Give me a high five. Bloop. So there's 5 months. Of those 5 months, 2 will be within the current financial period. 2 will be within the current financial period. And then, because we have 5 months, 2 is within the financial period, we're happy with that. We don't want 3 months in our information. So what are we going to do? We're going to say 7,500 times 3 over 5. What we want 3 months. What do we have? We have 5 months. And that 7,500 times 3 over 5 is equal to 3,000 Rand. So what are we going to do next to advertising? we're going to minus 3,000 Rand. Once you do that calculation, my apologies, we're going to add 3,000 because remember, they said it excluded it, right? Sorry guys. This is the amount that we, this amount of a year, my apologies, is 75 times 3 divided by 5, right? That's 4,500, right? So we have 7,500, which was excluded, minus 4,500, and that gives us that 3,000 we're looking for, right? That was the long way. The short way would have simply just been 7,500 times 2 over 5 to give us that 3,000 Rand. Remember, it was excluded, eh? It was excluded. So therefore, we've calculated our 3,000, and therefore we say plus 3,000 because we want that 2 months to be included. That amounts to 14,650. Okay, cool. If it says interest on investment was received and recorded, this is a balancing figure. So we're going to park that. We're going to come back to that. Then it says loan statement received shows an interest of 36,000. That would be your interest expense, and we can just fill it in there. 36,000 Rand. Then we have income tax amounted to 272,700. This is 30% of our net profit. They've already placed it in there, which is awesome. So what are we going to do now? We know that this is 30%. We know the net profit before tax must be your 100%. And we know that the net profit after tax must be 70%. So now remember, it is what you want over what you have. So to get your net profit after tax, we are going to say 272,700 times what we want, 70, over what we have is 30. And that amounts to, I'm not going to do the calculation because we're running out of time here. That amounts to 636,300. In the same way, we can say 300. In the same way, we can say 272,700 times what we want, which is 100 over what we have, which is 30. And that should give you an amount of 909. So it doesn't matter which one you go with. But the point is, it's going to be 909,000. Then we're going to work backwards, right? So we're going to say 909,000 plus 36,000, which is your additive inverse, will give you 945,000. Right. Then your interest income. The interest income, we know that's a balancing figure. So it means that we need to now calculate the top parts over here, right? So what we're going to do, we know we can calculate operating expenses by just adding all our operating expenses, and that amounts to 1738,080, right? This 2,262,080 will include gross profit plus our other operating income. We know that our other operating income is given to us over there. We've calculated. So to get our gross profit, we're simply going to work backwards. So instead of adding, what are we going to do? We're going to subtract. So we're going to subtract 262,080, so 2,662,080 minus 142,080, and that should give you 2,520,000. We are now wanting to calculate cost of sales. What is cost of sales? We know that it's an expense and therefore should be in brackets, and therefore it's 678. What are we going to, how to get cost of sales? There's two ways. You can either say 6,720,000 minus the 2,520, and that gives you 4,200,000. You good with that? Right. Righto. So we got all that. We happy. We on like a scone. We're running out of time here. And we're like saying, okay, cool. So now to get my operating profit, I can say gross operating income minus operating expenses will give me my operating profit. So what is your operating profit? It will amount to 924,000 rand. So this 2,662,080 rand minus 1,738,080 rand gives me the 924,000 rand. And check this out, y'all. We can then calculate our missing figure by subtracting these two amounts, which just so happens to be 21,000 rand. Boom. Mic drop. This is my mic. Yeah, that was time pressure, y'all. But I'm really hoping that you've learned something from this. It will be good for you to maybe go through the video again. And it's a pity I didn't get any questions, but it is what it is. But this information, along with the memo, will sometime be available to you. So, guys, I just want to say thank you for your time. I really hope I helped you. And I want to end off with, be good, say no to drugs, and remember, be the best version of yourself. Okay, see ya!